Buckle up because today we're diving headfirst into the wild world of tariffs, trade wars, and one man's mission to shake up the global economy, Donald Trump. Love him or hate him, his move could be reaching into your pocket. Welcome back to WildPadX, Tony here. Today is the 31st of March 2025. On this channel we talk about everything related to money, investing, crypto, and psychology. If you're keen to stay ahead in finance, be sure to subscribe. Now let's take a look at today's market. Bitcoin has taken a bit of a tumble, currently trading at $82,000. Over the weekends, it dropped by approximately 1.4%, shedding around $1,150 from previous close. The intraday high touched $83,000, while the low reached $81,000. Now let's talk about the middle class. When the macroeconomic climate gets tough and inflation rears its ugly head, it's often the middle class that feels the squeeze the most. When expenses rise and wages stagnate, many are forced to liquidate assets just to stay afloat. And so Wall Street ready and waiting to snap up these assets at a bargain price. And with all these cycles, it underscores the importance of risk management and maintaining a well-balanced portfolio. By planning ahead and not overextending, you can avoid being compelled to sell when the market is down. Looking ahead, if the market experiences further pullbacks, are you prepared with enough cash to continue your dollar cost averaging strategy? Share your thought in the comment section below. Into today's morning deep dive. So, is Trump truly making America great again, or has he taken a detour into uncharted territories? One day he's slapping tariffs on Mexico, Canada, and China, the next he's lifting them. He labels the Ukrainian president a dictator, only to express disbelief at his own words days later. Has the president of the United States officially gone mad, or is there a method to his madness? What is his end game here? If Trump's tariff policy was a relationship status, it's complicated. One day he's in love with free trade, the next he's ghosting Canada and China like a bad Tinder date. Back in February, Trump announced a 25% tariff on Canada imports, only to postpone it for a month. When Canada retaliated with tariffs on US goods, Trump threatens to double down with a 50% tariffs, then abruptly cancelled it. So let's take a deep dive into his strategy of using tariffs to make America great again. By introducing tariffs, Trump aims to bring manufacturing back to the US and make foreign import more expensive. The logic is that by taxing imported goods, domestic products become more competitively priced, encouraging companies to produce locally. However, when the US imposes tariffs on other countries, it's almost inevitable that it responds in kind, leading to a tit-for-tat escalation. This cycle can result in everyday items becoming more expensive for American consumers, as imported goods and materials face higher duties. Given Trump's business acumen and his education at Wharton, one of the world's premium business schools, it's safe to assume he knows well in basic economic theory. So why pursue this strategy despite the apparent risks? What could he or the US gain from stirring the pot and creating economic uncertainty? Could it be that he never actually intended to fully implement these tariffs? Perhaps by merely threatening and introducing them, he managed to deter large companies from investing in overseas manufacturing due to policy uncertainty. This strategy could be his actual plan, to make America great again by incentivizing companies to relocate factories and manufacturing back to the US soil. The success of this approach remains to be seen. It will likely take years to fully assess this impact. However, there is immediate effect on the market. The Atlantic Federal Reserve indicators suggest that the first quarter is on track for negative GDP growth, contributing to recent stock market volatility. Trump certainly knew how to command media attention and appeared to be prioritizing economic development over issues like human rights and other foreign policy topics. And in simple terms, for any assistance or support from the US, it seems there's now a price tag attached. Now let's take a look at today's top news. The first news, Bitcoin has dipped below $82,000, but some analysts believe that any potential drop, even to 65K, won't matter in long term. Why? Because central banks are getting ready to pump liquidity back in the system, potentially triggering a fresh wave of bullish momentum. While some investors are panic selling, whales appear to be accumulating in anticipation of the next move. Could this be the perfect buy the dip moment, or are we in for more turbulence? The second news, crypto industry's big wigs are knocking on Washington's door, demanding clear stablecoin regulation before new tax law rolls out. The uncertainty surrounding how stablecoin will be taxed is leaving businesses and investors in limbo. And with a potential crackdown looming, many are rushing to secure regulatory clarity. Some fear that harsh tax policy could drive stablecoin innovation overseas, while others argue that a well-regulated stablecoin market could bring massive institutional adoptions. The stakes billions of dollars and the future of crypto-friendly policy in the US. And in our third and last news, a trader has pulled off the financial equivalent of finding a winning lottery ticket in their sofa. They turned a $2,000 investment into a staggering $43 million by betting on PayPayCoin, a meme coin that skyrocketed in value last year. But here's where it gets wild. Despite their massive unrealized gain, they decided to play it safe and cash out $10 million. Just another day in the unhinged world of crypto. That's a wrap for today's episode. Subscribe for daily update in weekdays. Have a nice day, stay invested, and I'll see you tomorrow.